Hey guys, welcome back to Beyond Investing, the place where we discuss sustainable and innovative investing. In this week's episode, we're going to be discussing the upcoming earnings report from Tesla, and we're also going to be looking into other EV related news. But before we start, guys, do give us a thumbs up by pressing the like button and consider subscribing and ring the notification button for more content. To start, I would like to comment back to the video from last week on Airbnb. As I mentioned in that video, I believe that Airbnb is tracking well towards a 200 per share price. And we've seen a lot of action on this stock during the past week, especially amidst the uncertainties in Washington, D.C. Airbnb announced that they would be canceling all the bookings from the rioters that was part of the insurrection in the week before. Now, this news, call it goodwill, call it good intention by Airbnb, has had some effect on the share price, but I don't believe this is the main trigger for driving the stock price upwards. I believe people are starting to see the fact that the vaccine is coming out and that we are going to see an industry recovery as things start to normalize in the first half of this year, coming into the second half of this year on a pretty good level. I believe this year, the stock will continue to rise towards $200. Now, going back to the main event, Tesla will have its earnings report on Wednesday, the 27th of January. It's going to be exciting to hear what Tesla has in store for us in this report. I believe it's going to be a very good report, especially knowing the fact that they have reached their delivery targets of 500,000 delivered cars in 2020. That news has so far been a positive impact on the stock share for Tesla, although there was a pullback, which I believe is related to the fact that the National Highway Traffic Safety Administration ordered Tesla to do a recall of almost 150,000 cars. But still, Tesla, I think, smartly played out that recall by offering customers a 40% discount on an upgrade for their infotainment system, giving the customers the access to in-car video streaming, such as Netflix and other type of applications, giving them also access to karaoke applications and games and so on. So when it comes to revenue, I think Tesla will be reaching somewhere between $27 to $28 billion in revenue, with a gross margin excluding the regulatory credits above 23%, which I think is a very healthy gross margin compared to 2019, where they were around 20%. I think this will have a very positive impact on the stock share. I think we will see it climb immediately after the report, going towards $900 per share again, as it was doing after the New Year's. And then, as we've seen, new targets has been coming up from Wall Street, putting the Tesla stock price above $1,000 during this year. In addition to that, I think Tesla will give some updates on their new battery technology, how they are developing that forward, and what they're doing in terms of putting that into production. They're also going to give some updates on the Model Y release in Shanghai. And I also believe that they will give some information on the Berlin factory startup and the factory in Austin, Texas. In addition, I think they're also going to give some early evaluation on the self-driving beta that was released end of last year. What's the conclusion from their side and what they're looking going ahead for the autonomous driving capability. If you didn't miss it, Elon Musk did mention in the Alex Springer interview last year that they were confident in releasing a full driving capability during this year.
I'm extremely confident of achieving full autonomy and releasing it to the Tesla customer base next year.
And apparently Waymo's CEO came out and said that Tesla is not a competitor when it comes to autonomous driving, which is a bit funny to see, because As we all know, Tesla have had their beta version out already last year. They've been trying that out for a while now, and they've done a lot of real life tracking of the roads and feeding their system a lot of information to learn how to self-drive and be autonomous. Meanwhile, we know that Waymo has much less cars out there learning and feeding their system real life situations. So it's a bit contradicting what this CEO is saying or alluding to in terms of their competition to Tesla. So of course Tesla is a competitor to Waymo, and I think this is again another company that is trying to get some light shined upon it from the tailcoat and success of Tesla. So it's going to be very interesting to see how they address that in the report, and if they have a certain date or month when they believe that they can start to do these releases, and how they tackle the governmental and regulatory aspect of this. So all in all, I think it's a very exciting week next week for Tesla. The report will contain a lot of information, I think, and a lot of news, especially with regards to the battery technology that they're developing going forward, the autonomous driving capability, the new factories that they are getting online, and the models that they are delivering from those factories. This package will contain a lot of that information, and it's going to be exciting to see how the stock will react to this news and how the market will treat this news. Next up, we're going to be focusing on one of the main competitors to Tesla outside of China. It's, as you've probably heard the rumors, Lucid Air is expected to go public through a possible SPAC merger with CCIV. And that is going to happen in April. At least Lucid is saying that they're coming out public with a public offering in April. There's a lot of murmurs and rumors about that being with a SPAC, a special purpose acquisition, CCIV, a very good, I think, combination between these two. And we're going to go look into further why I believe that this is going to happen, and I'm very bullish into that scenario. So let's start with CCIV. CCIV is a SPAC, a special purpose acquisition company. It's essentially a black check company. It doesn't have any operation. Their sole purpose is to gather up capital to bring a private company public by supporting them in gathering funds. Those funds would be used by the company once it's go public, either towards R&D or expansion or any type of operational need that company requires. And this SPAC, CCIV, is headed by Michael Klein, a well-known businessman, and he has done a lot of these mergers before, very successfully done so. And he actually sits in the board of Credit Suisse, and he's had a huge focus into the Middle East, and he's brought the biggest IPO ever, which is the partial listing of Saudi Aramco on $25.6 billion, the biggest deal ever, essentially. So a well-known guy, working with the biggest clients in the world, more or less. On the other side, we have Lucid Air. They've had a lot of public news in the past years, especially coming off the tailcoat of Tesla. And they are headed by Jonathan Butler, which is also a well-known figure in the automotive industry. He spent 8 years as Tesla as a general counselor to the leadership team there. So he brings a lot of that expertise into Lucid Air. Lucid have had some financial issues in the past years, and the Saudis came in Specifically, the Saudi Nation Fund came in and bought 50% of Lucid on a price tag of $1.3 billion. Now, there's a thread here between the fact that you have Michael Klein working very closely with the Saudis, essentially managing their money, and then you have on the other side the Saudis owning 50% of Lucid. There is a red thread there connecting those two dots. I think this is a perfect match. You have a good money manager in Michael Klein. You have Lucid Air that needs to come out public, generating more capital to the company to do the expansion that they need. They are targeting to deliver around 30,000 cars this year. I think they will make the similar journey as NIO is doing, being a car manufacturing focusing on the luxury side of the EV market. They need this type of capital generation. And I think the market is also playing towards those rumors, which I think will actually happen. In the coming weeks or so, I think this announcement will be done public, and this stock will essentially double or triple, as we've seen with other SPACs. They quickly, as soon as the merger is announced, they go double or triple. I bought some of these shares already, and I'm looking forward to hearing about the news coming out in the coming 2-3 weeks. If this doesn't happen, still I will keep my stock shares in CCIV. I think it's a very good SPAC, especially managed by Michael Klein. They will find another company, if it's not Lucid, to merger and to bring public. Still, I think it's Lucid that it is Lucid that they will bring public. But if not, there's many other companies that they can bring public. It's the fact that CCIV is led by a good money manager. It's also targeting companies that will have a exponential multiples as soon as they come out public. Now, I'd like to hear from you guys. Do you believe that the earnings call from Tesla will be a positive one with a lot of news and a lot of things to unpack? And also on this SPAC from CCIV and possibly with Lucid, do you think that that's a good match? Do you believe the rumors that is being generated right now and also influencing the stock during the past 2 weeks? Leave a comment down below. Do consider to subscribe, and of course, as always, give us a thumbs up by pressing the like button, and I'll see you in the next one. Take care.